Good morning and welcome to the Genghis Personal Investment Webinar. So what does personal investment mean to you? Are you actively looking for opportunities to invest your money? Do you still find the concept of investing foreign or see it as a reserve of the lucky few? Do you have the opinion that you need a truckload of cash to be part of the investment landscape? Well, you've come to the right place. We are honored that so many of you registered for a webinar and that an equal amount have logged in this morning to participate in this discussion. My name is Damaris and I'm the Marketing and Communications Manager at Genghis Capital. I'll be joined shortly by Kenneth Maina, who is part of the investment team of our asset management arm. Now, Ken is a great guy. Not only is he a talented investment manager with over 8 years of experience in the financial markets, but he's also a determined and focused individual. I'll tell you why. Now, pre-COVID, which is what we referred to March and earlier, Ken single-handedly convinced about 1/3 of the office to sign up for the gym. He convinced me and another guy called Morris to dedicate time after work to actually work on our health and fitness. And before we agreed, he reminded us every single day on the promises we made to ourselves and to him to do better in 2020. It's that kind of single-minded determination to get results that Ken also puts to his work and that has contributed to the increasing yield we have seen in the Genghis Money Market Fund. Now, Ken will be sharing with us his knowledge in the fixed income markets. We will start off with basics like what is fixed income securities, and then answer questions on when is the right time to invest in them. And then we'll get to the crux of the matter. How can you as an investor enjoy the attractive returns they offer? We also want you, our attendees, to be part of this discussion. We want to interact with you and answer any questions you may have. Please engage with us using the Q&A tab that you'll see on your screens. And if you have any comments, please feel free to share them on the chat function. You can do this at any time. We'll address them, every single one of them, at the end of Ken's presentation. 2020 has been an unusual year. But even in the face of that, savvy investors and those who have wise counsel, like our investors, have been able to make gains. And we hope that we'll be able to do that for you today. So let's get started. Ken, over to you.
Morning, everyone. Just a moment. Wow, that was quite an introduction by Damaris.
You deserve it.
Let me just share my screen.
Okay, thanks.
Okay, is that visible to everyone?
Yes, we can definitely see it.
Okay, so as you've heard, my name is Kenneth Maina. I work with the investment arm of Genghis Capital. I would like to take you through the opportunities that are there in the fixed income market. If there's any question that you may be having, you can, as Damaris has guided us, you can always ask your question. My slides will be minimal. There'll be about 11 slides. I hope we can engage each other. And then I can take questions. My colleague Morris can also take questions. And then hopefully we'll have, everybody will be pretty convinced and we'll have understood the fixed income market in Kenya. Okay. So yeah, so what are fixed income securities? So fixed income securities are investment instruments that give returns in form of periodic interest payments, and also you'll get a repayment of the principal upon maturity. Mostly, we look at them as a form of debt, and debt, as we all know, is simply a loan. Now, there are various types of fixed income securities, which they're categorized differently based on a number of items, which I can look at. So number one, the issuer. So the issuer can be the government or it can be a corporate. So the corporate can be a company which is looking for money or the government is looking for money. And then another way that you can categorize fixed income securities is based on the coupon. So coupon is the interest that you get. So you'll hear me talking about interest, you hear me talking about coupon. They basically mean the same thing. So coupon can be different types. I can look at them, you can say fixed. So for example, you invest in a particular security, say you put in 100,000, they tell you, I'll be paying you 10%. So that is fixed, it doesn't change, they'll pay you. That's a contractual obligation of the same. It can be floating. Floating basically means it's pegged to a particular benchmark. So sometimes you may hear people are pegging it to maybe the performance of the treasury bills or the treasury or a particular treasury bill. Maybe they're saying if the treasury bill will be performing at this level, I'll add 1%, and that will be your coupon or interest. Some of them offer zero coupon, so for a particular period of time. Others give what we call a deferred coupon. So they tell you, we'll not pay you now, sorry, but we'll pay you maybe at the end of it all. Then there's the redemption method. So it can either be amortizing or bullet. So amortizing means basically on maturity, they may offer to pay you. So bullet means on maturity, you're paid everything that you gave them, the money. So if it is amortizing, there's a structure in which they will pay you. So they tell you maybe after 3 years, I'll pay you 30%. Then after 5 years, I'll pay you another 30%. Then on maturity, I'll pay you the balance, which is 40%. When it comes to the tenure, so one issuer may give a fixed income security, but the tenure is the one that differentiates the two. So for example, if it's more than 1 year or below 1 year, we'll get to that one in the other slides that will come up. And then the what we call options, which are attached. So some of them have no options. Some of them are what we call callable. So a callable, basically, a callable maybe opportunity is one where the issuer can choose to redeem the bond before the security before maturity. For example, if they took debt from you for 5 years, and then at the end of the 4 years, they have enough cash, they can offer to pay you back early. We saw that one happen this year. There's a particular bank which had issued a security which was to mature in December this year. But since they were cash rich, they decided to pay people early, and it also saves the company on some expenses. Another option is called a puttable. So that one gives now, it's on the reverse of a callable. So puttable gives now the holder of the security, the one who loaned these people money, gives them the opportunity to recall their principal before maturity. So for example, if I give you money for 5 years, in the contract, you can say at year 4 or something, I can choose to recall my money. It's not an obligation, it's just a right. So you can either exercise it or not. Now, based on these particular categories that have, these characteristics that I've given, I can take you to the next slide, which just shows the classification of fixed income securities that we're going to look at today. So it can either be government issued, which is a treasury bond, or a treasury bill. So that's what you hear people calling T-bonds or T-bills. Or if it's corporate issued, you can have corporate bonds, corporate papers, or bank deposits. And then we're also going to look at another element that we call alternative investment options. So now what I'll do, I'll just look at each one of them and give you the highlights and also take you through the advantages and disadvantages of the same. So we'll begin with government issued fixed income securities. Now, what actually happens is on an annual basis, the government will come up with this budget. And also when they come up with a budget, they need to fund the same. So for example, they look at how much tax they can collect. Now, there's usually a difference between how much they have, how much they were budgeting to spend, and how much they can receive in terms of, say, income from tax and other forms of income that they usually receive. So now the balance is what they issue as debt to people. So they now go to the local market or the international market, and now say they're raising money from the public. In Kenya, CBK is the one who's tasked with the mandate of issuing the bonds and bills. When they do it, when you're buying from CBKs, it's called the primary market. And then once someone gets the same, you can now buy it from other people, and now that's what you call the secondary market. That's basically the difference between the two. When you're directly buying it from Central Bank of Kenya, it's a primary market. But now after it has been purchased and people are owning it, you can now buy from other people. And that's what we define as a secondary market. Now, how do you differentiate between a treasury bond and a treasury bill? So treasury bills are just short-term debt issued by the government. They do it on 10 years of 91 days, 182 days, and 64 days. Treasury bonds, on the other side, are long-term securities, debt securities issued by the government for 10 years greater than 1 year. The same goes all the way up to around 30 years. For both of them, they are usually priced on an auction basis. For treasury bills, there's a weekly auction that you can actually get access on the CBK website. So when you log into the CBK website, they'll tell you when the next auction is happening, the results of the previous auction, etc. Maybe just to highlight, the current rates for the 91 days T-bill is around 6.3. The 1-day T-bill is around 6.7. The 64-day T-bill is around 7.69. So for treasury bills, you usually get it at a discount. So once you bid, and if it's successful, if say you're bidding for 100,000 Kenya shillings and you're successful, you not pay the 100,000 Kenya shillings. What you'll get is on maturity is you'll get the 100,000 Kenya shillings. So you'll pay around 99 or 98,000 depending on how the rates look like. So on maturity is when you get your full amount. On the other side, if you look at treasury bonds, you can either get them at a premium or at a discount, depending on how the rates look like. The good thing about treasury bonds is that they pay coupon or the interest on half-yearly basis, every 1 to 2 days. They are also issued on a monthly basis. I think I can take the question by Sylvia. She's asking whether the 91 day, 182 day, are those working days or calendar days? They are calendar days. Okay.
All right, Ken, you don't have to worry about the questions. We'll deal with them at the end so that you can actually go through the presentation in totality.
Okay.
Awesome. So everyone will get to them.
Okay, no problem. Thank you. So now we can look at the advantages of, we can lump them up together, the government issued fixed income securities. So the advantages mainly for government issued fixed income securities is, number one, the government is generally referred to as low risk in terms of defaulting. So you are sort of guaranteed that once you place your money with the government, you lend the government your money, they're going to pay you back. So the default risk is very minimal. For fixed income interest bonds, you are certain of a regular income flow. As I mentioned, you'll get your returns you'll get your coupon or interest every half yearly. In terms of liquidity, for treasury bonds, they are very easily tradable in the market. If even right now you wanted to buy the same, you can just go to the market. You'll easily get a seller for the same, or vice versa. If you wanted to sell, you can sell the same. And then flexibility. So the tenures of investment range all the way from 91 days to 30 years. Now, depending on your cash flow needs and your outlook, you have options of investing the same. The auctions are done on a weekly, on a monthly basis. So when your money comes in, you know when to position yourself in the fixed income opportunity. The major disadvantage I can look at would be interest rate risk. Maybe when rates go down or up, the value of your securities, especially if you have if you're marking them to market, may be affected if you're not holding the same to maturity, because you can either buy two ways. You can be actively looking to buy and sell, or you can be buying to hold up to maturity. So sometimes when the rates move in different directions, you stand to gain or you stand to lose. On that one, maybe can go now to corporate issued fixed income securities. So a corporate bond, we start with a corporate bond. It's basically long-term debt instrument, which has a maturity date of more than 12 months. And in Kenya, you have to get approval from CMA, Capital Markets Authority, for you to issue the same. It can be listed in the stock exchange. If you look at whatever advantage they offer vis-a-vis other government opportunities, so for example, a corporate bond is easily, you can compare the same with a treasury bond. They'll give a return which is higher than a similar government bond. So how people look at it is this way. If say the government is coming in to take, is looking for 100,000, and a corporate entity, a company is looking for 100,000, and you will view these people differently, and you'll trust the government more than a corporate person, a company more. So that's why people price, you tend to price, you give a premium to the company than to the government. So the government will earn, the government maybe is giving you 10%, you see people giving, a company is doing around 12%. So the return is actually far much better. Another advantage is most of them, they issue fixed interest rates. So you are guaranteed after every period of time, you are bound to get a particular flow of income. And then if you were to look at how, if a company was to collapse, and now we're going to liquidation, a bondholder ranks higher than a shareholder in terms of if a company was to go into liquidation. And finally, some corporate bonds, they give you an option to be converted into stocks. So at the end of X period of amount, you can convert your bonds value and buy equity in the company. Okay, we can go to the disadvantages. Mostly for corporate bonds, there's a risk of default. Say, even if you look at, you come back to the Kenyan market, there's I think in 2015 and 2016, there are two banks which collapsed, and they had also issued corporate bonds. So you can see the risk that is there. And then liquidity risk. Liquidity basically means if you can come in and out of the same, and how easy it is to do that. Sometimes you may find it very hard to sell this particular corporate bond that you bought, maybe when they issued, the company issued. Say, for example, a person comes in today, they're looking to issue a corporate debt, you buy into the same, 2 years down the line, you want to sell, sometimes it becomes very hard. They're not as easily sellable as government bonds. Okay. We can proceed to the next category of corporate issued fixed income securities, which are commercial papers. Commercial papers are just basically promissory notes issued by companies for raising short-term debt. They are comparable to treasury bills because they usually do not go more than 1 year. They have an advantage that they are really priced at a premium to similar tenure treasury bills. And then the tenure of investment is very flexible depending on the issuer. So you may have a chance where you may go in, they may give you 2 months, 3 months, 4 months, 5 months. They're not as rigid as we say a treasury bill is, because see, as a treasury bill, I said, it's 91 days, 182 days, and 364 days. In terms of disadvantages, the default risk is high, very high. We actually saw one big supermarket which collapsed, and they had issued some commercial papers to the public. Liquidity risk, commercial papers tend to be liquid when one wants to join in or exit the same. We can move on to the last category of corporate issued fixed income securities, which are bank deposits. So now for bank deposits, you may go and negotiate with your bank. They can give you either two options. They can give you either a call deposit or a fixed term deposit. So a call deposit is where you place your money, which has no maturity period. The rates are usually low, whereas a fixed deposit is where you go there and then negotiate. I want to place money with a particular bank for X number of days. So I want to place money for 3 months, I want to place money for 6 months, I want to place money for 9 months, or I want to place money for 12 months. So that's basically the difference between the two. So now the banks will take your money and then they'll lend onwards to other people. The major advantage of bank deposits, they're generally regarded as safe assets. Some banks may give you an option where you can take a loan against your fixed deposit, just in case you have a cash need and you don't want to break your fixed deposit which you have with them. We can say bank deposits are insured. I think most deposits with the banks are insured by KDIC. I saw the limit went up to around 500,000 beginning of 2020. Previously, the maximum they had insured was around 100,000 per person or per entity. The major disadvantage of the same is the interest rates tend to be low, especially because when you're going there to, when you're actually going to the bank to place your money, they don't regard, they see your amounts as being very minimal. And sometimes most of the banks will give you a minimum amount to invest for them to give you a fixed deposit rate or a call deposit rate. So you may find that if I tell them I have my 5,000 Kenya shillings, they're like, we don't offer that one here. You have to get a minimum, this minimum, and then when you get to this minimum, that's now when we can negotiate the same. Having covered corporate issued fixed income securities, I would like to move to alternative investments. And alternative investments, mainly, I will look at private wealth management. And what we have here is banks and fund managers are coming up with products which are aimed at achieving high income returns. And then they invest in different categories of assets so as to give a higher return than investing in one particular asset. So what happens, they target sophisticated investors, and what we call sophisticated investors is a term by CMA, so where you may find the minimum amount is actually a little bit high, to be around 1 million for you to participate in the same. So an example of the same is what we have in Genghis Capital. We offer teams, which the minimum amount is also 1 million. The major advantage of the same is that you are invested in a basket of assets. You're not only exposed to one particular security. So you will find that the product has investments in government securities, commercial papers, commercial bonds, and other assets, just to try and generate a higher return. The other advantage is they generally give a higher return than bank deposits or government securities, mainly because there's also the pooling power. When you pool assets, when you pool investments from different investors, you are able to negotiate better rates from maybe say banks. So for example, if a client was to walk into a bank with say 100,000 Kenya shillings, they would give you a return, say 4 or 5%. But if the client came and we had like 10 clients of the same, and we had around say 10 million, and we went to negotiate to the bank for higher rate, we generally get a better return than the client would get. And that's how we generate a better return in these particular products. The product is also flexible in terms of the tenure of investment. You can choose the vanilla ones, they'll give you 3 months, 6 months, 9 months, 1 year. There's the flexibility. You can also negotiate, say 8 months, you can negotiate for 11 months, and the like. Liquidity, ease of entry and exit, they're very liquid. There's a portion of the assets which are usually placed in cash and call, just in case a client wants to come in or a client wants to exit as easily as possible. The major disadvantage of the same is the minimum amount for investments tends to be high, targeting sophisticated investors. And sometimes when you look at it, the return is not guaranteed, but a target return. So what that means, they'll tell you, this is the return we're looking at. They'll try and achieve the same or surpass the same, but according to the environment that we are in, we're not supposed to guarantee. You say it's a target return. If you outperform the same, you are most likely, you negotiate now with your banker or your fund manager, you negotiate with them, how now do we utilize this amount which is higher than the return that you guaranteed? Say, for example, if You guaranteed me 13%, but you achieved 15%. Now, how do we share? How do we share between now the investor and the fund manager the extra amount which is higher than the 13%? I'll take you on things that we need to note. Risk versus return. Higher risk instruments tend to generate higher returns, as you've seen. If you're giving the government money, the return may not be as high as if you're giving a corporate entity money or the likes. And then if you look at it, the investment profile, shorter tenure investments generally attract lower yields than longer tenure investments, mainly because the investor on the other side, the person you're lending to money, when he has money for a long term, maybe you give the person money for 5 years, they're able to budget and do major projects here and there. And also, if you give me money for 3 months, sometimes one may be a little bit rigid. That's why they give you a lower return. Liquidity of investments. Any investor engaging in, trying to invest in anything, they need to know how liquid the investment is. So for example, you don't put your money somewhere and 2-3 months down the line, you need cash and you cannot exit the same. You get, there's a tax profile. Most instruments, they attract between 10 and 15% withholding tax on the income received. So for example, if say we have a bond worth 100,000, which is giving an interest of 10% for a whole year. So it means for 1 year, your interest, the gross interest is 10,000. Now, on that 10,000, there's a withholding tax that you pay. It can be between 10 to 15%, depending on the instrument. So on the 10,000, say you pay 10%, so that's 1,000. So what you receive is net, will be 9,000. But there's also some instruments which we have that do not, you don't pay tax. For example, infrastructure bonds, you don't pay tax on the same. That's why people love them. Fixed income securities can be credit rated or not. You've heard of the likes of Moody's, the likes of Fitch, and the likes. A credit rating is helpful to an investor so that they can know the risk they're getting involved in. So sometimes you getting into an instrument which is not rated, vis-a-vis someone getting into an instrument which is rated, you need to know the risk. You'll find that even the one which is rated, the returns may be a little bit lower than the ones which are not rated. And then finally, for all opportunities that I've indicated there, Genghis Capital has a capacity to engage and discuss clients on all opportunities. We have the capacity, we are able to offer the same. We can link you up with a CBK, we can open accounts for you and everything. And just to sort of end my presentation so far, there's a quote by Warren Buffett I love. It says, never invest in a business you cannot understand. I think on that one, now I can take it back to Damaris so that you can do the Q&A.
Awesome. Thank you so much, Ken, for that full session. I wonder if you could stop sharing the screen for me for a minute. Okay? Maurice, thank you so much. Maurice, thank you so much for tackling a lot of the questions that have come in as Ken has been doing the presentations. I think let's tackle them in the order that they came in. So I'll start with the ones that were channeled through our chat function. So Susan, you had asked if we would share the slides after the session. I did share that. We will send everyone who attends this session a link to the video that we'll upload to our YouTube channel, and you'll be able to review this presentation again. So I hope that will be sufficient. So you can revisit, you can reshare with people you think will be relevant, and please be sure to subscribe to our channel as you hang out on it. We had Liz Wangi who asked, is the interest for T-bills annualized or is it for the said period? So Ken, I think I'll ask you like maybe 1 or 2 questions and then you answer, then we get back to them. So we have Liz Mwangi asking about interest for T-bills, whether they're annualized or it's for the said period. Then we have Daniel who asks, how can one invest in the fixed income market, especially for retail investors? So Daniel and Liz, thanks for your questions. And maybe Ken, you could answer those as we walk through the list.
Sorry, Damaris, I didn't get the second question.
The second question was Daniel, who was asking us, he's a retail investor. He wants to know how he can participate in the fixed income market. Perhaps he's not interested in bonds or bills, or maybe even the minimums for trading in bonds and bills is a bit high for him. What's a small way he can participate? Maybe you can tell that to us again.
Okay. The first question was about interest, whether it's annualized or for the particular period, it's annualized.
Yes.
So for example,
okay.
If for 6 months, it's 6.773%, that's on an annual basis. So you divide by 2.
Okay.
Yeah.
Okay, that's awesome.
So for Daniel, he was asking whether he doesn't want to invest in bonds, doesn't want to invest in bills. He was looking for other opportunities to invest in some opportunities out there.
Yeah.
There are different opportunities out there. For example, a money market fund is a fixed income opportunity. The nature of the market fund is fixed income opportunity. And Genghis has the Helaimara fund, where the minimum is, I think, 1,000. Yeah,
it's actually 500.
So you can take advantage of the same, and it's very liquid. You can get in and get out as easily as you want to. So the money market fund basically is allowed to invest in treasury bills, treasury bonds, corporate papers, commercial papers, and the maturity period for a whole money market fund, according to the new regulation, should not be higher than 13 months.
Okay. That's great. Ken, do you mind stopping the screen sharing so that we can actually see your face, look you in the eye as you tell us this information?
Okay.
As you do that, I'll move to the next question by Susan Nekesa. Susan, I saw Maurice, who's part of our panel, also address this question, but maybe I can just share it so everyone is aware. What type of investment is Kiba? So Maurice, a bit lower down in the chat, has actually shared that Kiba is a government security that allows retail investors to participate in the fixed income market, but now you actually use your phone for buying into the primary market. But maybe Ken, you could add on to that.
Oh yes, so it was a partnership between the government and CBSE to allow people to buy bonds using their mobile phones. You actually the USSD code that you dial, and the minimum amount of investment is 3,000 Kenya shillings. And from there, you can now buy and sell in lots of 500 shillings until the opportunity is
okay.
I don't think there's one open at the moment. I may have to confirm because the previous one was closed.
Yeah, I saw the payment for investors a few weeks back.
And another thing to note is it's a normal bond. It just has a same as a normal bond. So you get interest after every 1.5 yearly basis, and then it has the same features as a normal bond. But now they are trying to go to the masses.
Yeah, by lowering the minimum. That's great.
Yes, because
all right, awesome.
Maybe something we didn't indicate was the minimum for investing in a treasury bill or a treasury bond is 100,000 Kenya shillings. Now, Kiba was now the market.
Yeah, that's a great opportunity. All right, we have Veronica Muthe who asks, could you help us to dissect the T-bonds issue just released today and what to expect in terms of performance? So Ken, do you have this information with you?
Let me just I can only give an indicative rate where.
Okay. All right, no worries. As you pull that information up, I can continue. We have Gladwell Lugusa who asks, what's the difference between a bondholder and a shareholder? I don't think the gentleman is very good at multitasking, so perhaps I can handle that question. I think think the difference is actually essentially in their names. A bondholder is someone who holds a bond, whether it's an infrastructure bond, a fixed coupon bond, whichever kind of bond that you as an investor buy. A shareholder is someone who actually goes onto the Nairobi Securities Exchange and buys shares into a specific company. So whether you buy shares in Safaricom, EABL is a very good counter to be getting into. So anyone who actually buys and trades on shares, that's a shareholder. And of course, a shareholder is entitled to different investment returns. So for example, they would enjoy the dividends if a specific company declares dividends. A bondholder, on the other hand, would enjoy in the interest payments that the particular bond issues. So Gladwell, I hope we've been able to address that question. Arwins asks, on bonds, when coming on board through Genghis, do you choose a specific type of bond you prefer, be it infrastructure or otherwise? So that's another question that I can address, Arwins. Thanks for that. Now, as you come to Genghis and you want to trade in bonds with us, you come in with a specific need, or you have a specific desire. So for example, we've learned that infrastructure bonds are slightly, are attractive to people who are trying to perhaps enjoy the tax exemptions that come with it. But yes, when you do come and join us at Genghis to trade in bonds, you get to choose whether you want to buy a fixed coupon or an infrastructure bond or any other kind of bond that's available in the market. Ken, are you ready to answer the question that was asked by Veronica?
Yeah, so what I see on the CBK website is that an auction running from yesterday for the next 2 weeks up to the 13th. The government has reopened 2 papers. There's one which is has a lifespan of around 10 years to maturity, and the other one has around 23 years to maturity.
Okay.
Yeah, so people you have to place your bids by Tuesday, October, and the results will be on 15th, and then you'll pay, I think, after 5 days. So now for this, what actually happens is we'll analyze the opportunity internally, and our research guys will also give a note on the same by almost a week to the auction. So it's something that you can look out for, and they'll give guidance on where they see the rates coming in. Yes, I hope I've answered the question. Did I?
I think you did help her out in the question. And I think, Veronica, if you want to continue this discussion, please reach out to us. You can talk to us on info@Genghis-Capital, and we can continue the discussion. Going back to these questions on chat, I want to finish them before I go into the Q&A. We have quite a number. I don't want to do the colossal mistake of leaving out anyone in the discussion. I handled that. Now, Lennox is asking, what is the withholding tax rate? Every time a question comes, I get pushed down the list. But Lennox was asking, I had just pulled up his question. My apologies for this. Should really look into a way of streamlining the questions here. Morris or Ken, can you pull up Lennox's question? I'm trying to locate it again. Okay, I found it. What is the withholding tax rate for corporate bonds? Is it final tax? How is it treated for tax purposes in case it's converted to equity? And then we have Moses Juma saying, what of some form of, okay, so Moses, you'd asked about form of evidence for attending our session. I asked you to kindly chat to us on marketing@Genghis-Capital so that we see how we can assist you in providing evidence of attendance. So Ken, you have the question from Lennox, and I can add for you the question from Frank. Please repeat the returns for the different maturities, and also how do the fixed income returns differ to stock returns? Are they better? So is it better to trade in bonds than it is to trade in shares? And how is tax handled? So Ken, please.
If I got the question for the tax rate, so the normal withholding tax that you pay is 15%. That is on the return that you get, on the interest that you get. But if you look at infrastructure bonds, they are zero rated. And then if you look at longer tenure bonds, so what happens to in the Kenyan sector is any bond below 10 years attracts 15%, any bond above 10 years will attract 15%. No, any bond below 10 years, you pay 15% withholding tax. Anything above that one, you pay 10% withholding tax. Yes. The other question, sorry, Damaris, what was the other question?
Hey, the other question was about, let me just pull it up. There's so very many questions. These are good problems to be having. He asked, it was Frank Muhoho asking, are the returns for bonds better than the returns for stock?
That one, let me give Maurice that one, so at least people can hear his voice.
Okay. Maurice, thank you so much for joining us. Everyone, Maurice, this is our senior manager for asset management. He's the guy who can also convince to go to the gym. So Maurice, maybe we could start with Frank Muhoho's question. What's better to invest in, bonds or shares?
I think that question can better be answered by first determining what the clients want to achieve. Because some clients fear risk. They don't want to involve themselves in a lot of volatility. So those ones cannot invest, those types of investors cannot invest in shares or equities. But some clients, they can withstand risk, they have shock absorbers, they can go for shares. So if you are a client who is risk averse, it's better to go for fixed income opportunities. If you fear risk, go for fixed income. If you love risk, you won't mind seeing the value of investment going down by half, then shares is your constituency. So okay. It depends whether you can withstand shocks, shares. If you can't, fixed income.
Okay, thank you so much, Maurice. And everyone, if you've not figured out, Maurice is our resident guy for metaphors. So if you have shock absorbers, Frank, please also talk to Jenga because we have our stock brokerage. But if you're more risk averse, I am risk averse, so I like fixed income instruments. I don't have the capacity for surprises. All right. Our next question is from Joshua. He asks, is there a law that protects investors from default risk in corporate bonds? And then we have Kevin Mudhama. We could also answer his question. He wants us to expound on the disadvantages of government securities.
We'll take the first one.
Okay, go for it.
The first one was, is there a law that protects bondholders when a company defaults? It depends on how the instrument was structured at the issue. If the instrument was structured as a guaranteed, it has like an insurance protection layered on it, then when, in case a company defaults, now you activate the guarantee. If it was not guaranteed, it means you are just at the mercy of that company. Worst case scenario, if a company is going down, now we go now to the insolvency issues and how each financer of the company, where they rank. Where now, what Ken was saying, that bondholders usually rank higher than the shareholders, because shareholders, they participate in the residual income, they are ultimate owners of the firm. So we have to deal with other people's first. So if you want to determine whether you have a safety net in case of a company defaulting, go back to always scrutinize the information memorandum so that you understand the structure under which this instrument has been layered on. Most instruments, they don't have guarantee. That's why they give a better returns. You get a guaranteed instrument, they'll most likely have an issue at a discount.
Okay, perfect. So I like that advice. As an investor, always make sure you arm yourself with information. Now, Ken, maybe you could answer Kevin Mudhama's question before I move to Q&A, just so that we don't neglect the guys who also use the Q&A. Now, Ken, for you, you are asked if you could just quickly expand on the disadvantages of government securities.
Okay, thanks, Kevin Mudhama, for that question. So now, what ideally happens is there's an inverse relationship between the coupon of the particular bond. So the coupon is what you get as interest on a half-yearly basis, and the yield in the market. So for example, you may buy a bond today And if you want to sell tomorrow, you don't sell at the same value. So there's something that we call the yield in the market. So if the yield goes up, yield is the interest rate. So if the interest rate goes up, the value of the bond goes down. And if the interest rate goes down, the value of the bond goes up. So the disadvantage is there's a link between the interest rates in the sector and the value of your bond if you're going to hold your bond and mark it to market. Because you can either look at two ways. You can either buy and hold to maturity, or you can buy and you will be sort of trading. So for example, in 2010, 2011, when the rates moved all the way to up to 30%, most of the bonds value really went down. Now, coming back to now, where the rates are coming down and everything is sort of stabilizing, most of the bonds, the yield, the value of the bonds has gone up. So that's the risk I was talking about. Yes.
All right, thanks. Now, before I jump to the Q&A, I saw a question that I really love answering on whatever platform. Muranga asked, what's the current rate for the Genghis Capital Mutual Fund? So Genghis Capital has a money market fund called the Heleimara, and our current rate that's just been published is 10.56%. Our rate is net of management fees, but gross of withholding tax. So we are the highest performing money market fund right now. Like I mentioned earlier, the minimum is 500 shillings. So if 50,000 is a lot to ask of you right now, 500 bob could just mean you skipping lunch or even not buying a book like me, and just put that in the Heleimara account. And you'd be surprised how daily compounding interest really goes a long way. And it's a great way for investors to get started. So Muranga, I hope I will see you on the other side. We move to the Q&A because there are quite a number of them. Kausik is asking, there's his first question, which was answered by Maurice. That was, what's the difference between clean price and dirty price? Now, Maurice answered in a very concise way that dirty price is clean price plus accrued interest. His second question was, why reopen a treasury bond? This is the fixed coupon bond 1/2020, dated 27th July 2020, which was sold at a high price of 107.653, but is now being reopened for 100 bob. So Kausik, you have very concrete data here. I will allow Ken to answer this question, but let's also answer another one. Benjamin is asking, local government debt is funded by around 54% by banks. Why would one choose to place money in a fixed deposit as opposed to investing direct with government? Being at the end of the day, banks are investing this money in government securities. He also asks, what are your facilitation fees to invest in government securities? And what do I need in place to invest the same? So those are three questions for Benjamin and one for Kausik. Ken, you feel you can start on them? Ken, you're muted.
Ken, you are on mute.
There was a first question. I was trying to look for it in the Q&A.
You could click on
maybe Damaris, I can answer the first one because
okay.
I'm usually good in talking and not writing. That's why it was that short.
Okay.
So the first question was the difference between clean price and dirty price.
Yes.
So there are two things. There are two sources of returns when you're investing in a especially in a government bonds or any other fixed income instrument. One is the coupon payment that you will get as an investor, which for government bonds are issued semi-annually, commonly semi-annually, but again, other structures can be there. Then two is the price movement towards par. Par for government bonds is usually 100 shillings.
Okay.
So if I bought a government bond at 90, it means now when the bond matures, the government will pay me 100. So this movement from 90 to 100 is also part of my returns. Technically, you can call it capital gains. So when I'm going now to the question of clean and dirty, the value of any financial instrument is the future cash flow that you expect from the instrument, and you discount them back to present. If you get that, that will be the value of a bond. I lay out all the coupon payment that are expected to be paid that are still part of the future. plus all those capital gains that I'll get or capital losses if I bought at a premium. When I add all this together after discounting, what I will get is the clean price.
Okay.
So that's the clean price. Then between the time I'm doing this and the last time that the bond paid coupon, there are coupons that have already been accrued. Accrued means they have been earned, but they are yet to be paid. So if I take my clean price plus the coupon that has been accrued since the last coupon payment, when I add them together, I will get the dirty price. So dirty price, another name for dirty price is the full price of the bond. So dirty price is simply my clean price plus accrued interest since the last coupon payment to the day I'm doing valuation will give me dirty price. I hope now it's clear.
It is very clear, very, very clear. Okay, I know Ken was looking up the question from the second question from Kausik. Maybe Maurice, you could answer Benjamin's question in the meantime.
What was the question?
He said local government debt is funded by around 54% by banks. Why would one choose to place their money in a fixed deposit as opposed to investing directly with the government, being at the end of the day, these same banks are going to invest this money in government securities? And then he also asked for facilitation fees and what does he need to get started?
I think, Benjamin, if you look at investment environment, the thing that determines how people allocate assets is purely information. So maybe a person who is just putting money in a bank deposit, they don't know that at the end of the day, this bank is collecting money from me and in turn invest in government instruments. But now, if you participate in seminars like this, now people that are here, we know I'm giving government money. This money is going to end up in a government instrument that is even yielding higher than what the bank is giving me. So if you have information, then now you can structure how to go about all of this. You now bypass the banking system and you go to to invest the government bonds directly as an individual. The advantages will be one, you'll even get better returns. Then number two, you'll even feel safer with government than any other private company like banks. So it's just information that people don't have, how the banks lay out all their investment program and where they get money from. That's clear. Eh?
It's very clear. Maybe you could tell him our facilitation fees and how he can get started. If you don't have them at the top of the mind, maybe you can just refer to him, how you can find that out.
I think facilitation fee for the first time, if you can choose to invest in fixed income instruments differently. You can choose to go, you as an individual, to bid for the government instrument, where if you bid through Genghis, for primary auction, Genghis will not charge you because the fiscal agent, central bank, will pay Genghis as a placement agent. When another way of doing that is when now you move to trade it, to buy from secondary market, now the NAC levies and charges, trading charges will come in, which I think all of them put together is about 0.4% of the value of the transaction you are doing. Alternatively, if you don't want to go through the hassles of going to CBK, opening a CDS account, knowing whenever there's an issue, knowing where to bid, if all those things are a lot of work for you, you can say, I will invest alongside other investors, which now you can even come to invest in funds like a Laimara Fund, which basically derives returns from government instruments. Then now at a Laimara Fund, the yield for today is what Tamari said, 10.56. And this one, there's no any other fees that will be charged, except now the withholding tax, which is now charged at individual level. And as one person said that in life, there's only two things that are certain, death and tax payments.
That was Julius Caesar. Whoops, I think. All right, Maurice, thank you for that. I think as you answered that question, you also touched on Titus's question. He was asking the same about fees, but he also added a question: does he need to have another account, or does his existing CDS account, is his existing CDS account enough?
It depends with who is where is the CDS account is making reference to. Where is the residence for this CDS account in terms of who is the administrator? CDS account, the normal that we know them, the one that are CDSC, those are for holding shares. If you want to invest in government bonds, you have to open another CDS account that now will be housed at central bank. And that's the challenge that most investors actually don't want to go through, because you love to go to central bank, you have to know the procedures and everything. And the challenge is that you have to go there in person. No one can do it on your behalf. That's why now, if you don't want to go through all those hassles, it's better you join alongside other investors in a pooled fund like money market fund, for you also to still be able to get the advantages of investing in fixed income instruments.
Okay, awesome. Ken, we are about to go to you to answer the question for Kausik. I hope you found it. But before then, Emmanuel Mureithi, I believe Morris's excellent explanation on clean versus dirty price has helped answer your question as well. Ken, are you ready?
Yes, I'm ready.
Okay, go for it.
He was asking why a bond which was issued this year in July, a 5-year bond was issued in July at a price of 100, is now trading at a price. So now, what actually happened? A bond is like, how can I describe it? An appealing property that everybody is looking at. So in the market, most people are looking for this particular 5-year bond that was issued in July. So as the law of demand and supply says, if the demand is high, the price goes up. So now, as I was explaining previously, so now for this particular bond, when the bond was issued, so now in the secondary market, it started trading and people started looking for the particular paper. So now the rates went down, so the price went upwards. As I was explaining, the inverse relationship between the yield and the coupon. So that's why you derive now that 107, which also caters for, if it's the dirty price, it also caters for the accrued interest from then to date. The other thing is, now when CBK is now coming back into the market and they're looking for money from investors, they also look at which bonds are performing very well, which ones do people like. And that's when they can reopen the same bond in the market, because they're very certain that if I reopen this paper, I will get 20, 30 billion. Sometimes there are papers which are not, people don't like. Maybe the long papers, the 20-year papers, 30-year papers. So CBK may come to the market trying to extend their period of their debt, but people don't want to participate in the same. But for these mid and short-term papers, people really love them. And that's why you can see the price of the same has gone up. So the value of the bond has gone up. Yeah, I hope I've answered properly.
You have answered excellently. Okay, let us continue. I'll go back on chat shortly, but we have another 19 open questions here. David is asking, offshore and Forex part of alternative investment, and do you have such products and services for your clients? So David, let me try and understand the question. You're asking if we offer offshore trading and Forex trading as part of our alternative investment, and if we offer the services to our clients. Please feel free to clarify if I haven't gotten it correctly. But David, Genghis Capital, our investment bank arm, it has a partnership with EGM Securities that allows our clients who have CDS accounts to trade on a platform called FXPesa. Now, FXPesa opens up your world of investment to alternative investments. That includes precious metals, indices, and offshore stocks and bonds. So if you're interested in trading in the global financial markets, please reach out to us on info@genghis-capital.com and we'll guide you accordingly. I will also take the initiative after the event and look up your email address and send you an email just to introduce you to that particular product. I hope I've answered your question. If I have not, please feel free to add on. We have an anonymous viewer, anonymous, who says, thank you, Morris. That makes sense. Morris, you're making a lot of sense on everything. However, he says, does that mean then that the process of pricing bonds is not as straightforward as you were taught in school? So I think the answer is a brief yes, but maybe Morris, you can changia a bit there.
Yes, it's not as straightforward as we were taught in school, because the first time where I met the concept of dirty price when I was working. It was never mentioned to me in college. But I think if you just sit back and understand, ask yourself a question, what is the value of a financial instrument? Just the expected future cash flow discounted back to present. Then you put them together. That's the value. Then now, if it's a fixed income, it means it has some other instrument that are coupon that has accrued, to put them together to give you the dirty price. So yeah, it's not straightforward. You need to understand what exactly you're asking, and also the challenge that comes in with fixed income. They accrue this income on a daily basis. Every day lapses, you've earned interest. Every day lapses, you've earned interest. So that's where most people don't get.
Okay, Maurice, thanks for that. We have another question. On the T-bills, the interest rates, are you able to negotiate on the same? I'm going to attempt this and say the T-bill interest rate is set at the auction. So somebody asked, when are the auctions done in Kenya? They're done on Thursdays, right, Maurice? And I believe
they're done on Wednesday for...
Sorry?
On Wednesday for 364 and Thursday for...
Oh, I don't know if it's 91. My internet.
You can hear me?
Yes, now I can hear you.
Yeah, they are done on Wednesday and Thursday. Wednesday for 364, 182 and 91 is on Thursday. And also, Damaris, let me just add more on what you said about the rate. But if there's something that is usually very democratic, say what you want, then we determine whether you will get it. It's Treasury instrument auction. You can even bid at 30, but they'll just tell you your 30 was very expensive. We chose cheaper guys. You can bid at whichever rate that you want, but the only risk that you are carrying, you may not get the instrument that you want. There is a place where exactly you say what you want, then they determine whether you will get it.
Okay, democracy at play. Okay, thank you for that. Kaushik is back with a question. Are there tax implications other than withholding tax for capital investments for corporate bonds for individual investors?
Let me answer that. Most government corporate instruments are usually issued at par. At par means for example, I'm giving out 10 million, and at maturity I'll be paid back 10 million. So there, what you are simply earning is the coupon rate, is the coupon. So if you earn coupon, withholding tax is 15%. And I don't know how to call them, the tax changes that were done during COVID that gave people a lot of tax break. One of the changes that was there is that interest that is earned by an individual, withholding tax is final. If you paid 15%, you will not pay additional 15% when you are filing returns. But when it's a company, it's different. You pay 15%, you move again and pay another 15% when you are filing returns. So they are investing as an individual is better than investing as a company.
Okay, great. I think we should move like quick fire now. I've gone back to chat only because we haven't been there for a while. And we have Frank Muhoho who said, what current investment instruments in Kenya offer the highest returns? Stocks, fixed income, real estate, etc. Now, Frank, I hope you caught Maurice's metaphor on shock absorbers. It just depends on your risk appetite and kind of returns you're looking for. Stocks have the potential for high returns, but with high returns come high risk. Fixed income may have considerably or rather visibly lesser returns, but it's for a specific kind of investor. Real estate also comes with its specific challenges. For example, liquidity. It's not as easy to turn it into cash, but I'm happy to have either one of you contribute to that quickly. If not, I would go on to Gladwell's question. She asks, why are infrastructure bonds tax exempt and which other types do we have? Gladwell, I see you. We're trying to avoid the tax man. Ken, please tell us, are there other types of investments that are tax exempt? Or Maurice, are there any other kinds? And why infrastructure bonds? I know it's probably because we want to build our roads and our bridges. So we're trying to incentivize citizens to invest in those projects. But please tell us something.
I can take that one. Now, previously, the government was very open when they were doing infrastructure bonds. For example, when you look at the note itself, they would tell you this money is going to build a road, this money is going to build a bridge in this place or this place or this place. So the nature of it, of them, they don't pay. There's no tax liability on that one. So, nowadays, they're not really, they don't really tell you where the money is going to. They just say funding for infrastructure projects. Even if they go and take it back and do other things, we are not very sure about it. So now, that is infrastructure bond that you don't pay tax. So for the other treasury bonds, just basically to fill in the gap between whatever they're budgeting, whatever they get from tax, and now this gap that is there. Yes.
Okay, and are there other investment instruments that are tax exempt?
No, I don't think so. Unless I may be wrong. Are there? I don't think so.
Okay, tulipe ushuru to linde uhuru. So we are taxpayers. Now, Susan, you ask, is there an age limit for opening an investment account? I believe the age is just 18. You just have to be 18 and above. And I think you need a form of identification to open an account, whether it's an ID or a passport. If it's for example, a money market account, you can open for a minor, but it's a guardian or parent who does that. So you can, if you're below 18 and you're interested in investments, your guardian or parent can open for you an account. There's a form specifically for that. So they're not locked out. Liz, I believe your question on charges was addressed, Liz Mwangi, but we're happy to continue the discussion after the session. Ken, your audio quality is questionable, but I think it is better now. Susan, we answered your question. Thank you for the compliment, Peter Kaloki. We are glad that you have learned something, albeit you joined late. Maurice, your metaphors are finding a home. Now, there is a gentleman, Mr. Shah, who wants to know what happened to people who invested in Imperial Bank, their corporate bond. I know, Maurice, you were talking about IMs, and there's someone else who asked about default risk, but do you have the specific details on this Imperial Bank corporate bond?
I don't have specific, you can hear me? I don't have specific details,
yes,
but how I can just explain is what will happen to a bondholder that one ranked lower than other preferred debt providers, and number two, that there was no guarantee. What will happen?
Okay.
They will rank all the financiers for the firm based on where they rank. And what I'm almost certain is that the debt only rank higher than the shareholders. Only rank higher than the shareholders. So if funds will be available after meeting all those preferred debt providers, you pay them, whatever remains, now you move to bondholders. If it will be enough, all of them will get something. If it won't be enough, let's say if it's a quarter, all of them will get a quarter. So what will happen, they'll just have to rank all the providers of financing to the company in terms of where they rank, and now the money that will be found will be layered in terms of each tier and where they rank, if as a subject to the availability of funds.
Okay. All right, then I hope, Mr. Shah, that's an adequate guidance, but of course you can look into the matter further. Murunga is impressed with the rate, but Frank is doing his due diligence and comparing us to other market players. However, I too have looked at the socials and I see we are offering about the same rate, 10.56. You know, in a money market fund, the rates fluctuate every single day. So it's just a matter of doing a due diligence, finding the company you have the most affinity to, the one who offers a minimum top up, and you shop around and you make the wisest decision that is most suitable to yourself. So Frank, we are happy to continue the discussion if you'd like. If I go back to the Q&A, because I believe I've exhausted the questions in the chat, I'm seeing a lot of questions coming up that we've addressed before, but there's Anonymous who's back who wants to know, how deep is the Kenyan FI market? I have personally only ever seen government bonds, and I think I saw one corporate bond by Kenyan last year. Is there more than this that's happening behind the scenes? Is there more than our government bond and corporate bonds? Gentlemen, do not tire on taking the point.
I can answer that. The major participant in terms of the issuer in Kenyan debt market is government, the Treasury. What happens, Kenyan also had a bond. It was meant for Kenyan, it was meant for Kenyan infrastructural projects, which I think has already been paid. CBA redeemed theirs the other time, I think like a month ago. The challenge with the corporate issues is that now, as a result of what happened to the likes of Imperial, Chase Bank that issued bonds, I think there have been no much activities in terms of corporate debt segment. So that's the challenge. But the major issuer in the debt market in Kenya is the Treasury.
Okay. All right then. Imana Murithi, I think his question, he wanted to know the difference between an infrastructure bond and other government bonds. And I know Ken's presentation actually covered the different types of bonds, but maybe what we could talk about is this sensational term, the Euro bond. What's the Euro bond? I have seen smiles, so I'm expecting healthy discussions.
Ken, you can take that.
Yeah. So the question on infrastructure and treasury bonds, I think I captured that one very well. The other thing with infrastructure bonds, they are sort of amortized. So you don't pay everything they don't pay on bullet on maturity, they don't pay you every day. So they give you sort of a schedule how they will be paying you. So after X years, they'll pay you this amount of money. After 5 years, I'll give 40% of the principal, etc., etc. So now for Euro bonds, they are what the government was now looking for money, and they thought they would get cheaper money abroad. So they went and pitched to foreigners. Unfortunately, most of the local people are not involved in the process.
Ken, maybe I can have you lean closer to the laptop so we get better audio.
Okay. So the government was trying to look for money abroad.
Yes.
From foreign investors, which was dollar denominated. So now they went, they got, I think we are now on tranche number 4 of the bonds, which is dollar denominated. Because you see, the ones that we get in Kenya, we buy them in Kenya shillings. The ones that we get abroad, buy them in dollar denominated currencies. And that's where the risk comes in. So now if the Kenya shilling continues the trend that is moving there, because now the Kenya shilling has moved from say 100 to now 209, the value of the debt is also increasing. Actually, someone was saying for every 1 shilling that we lose versus the dollar, the value of the debt is going up by around 10 billion. Yes. So basically, it's dollar denominated debt that we received from foreigners. Yeah.
Okay, awesome. Thanks for that. There are a couple of questions that I can quickly go through and answer myself. John Musembi asked, he would like to open a money market fund for his daughter. How do I go about it? John, you'd be opening a minor's account. I've taken note of your full name, so I will look at the registration details and then reach out to you and share with you the minor's account opening form. So we'll do that at the end of today, and good decision. Macrane would like to know, first, what's the process, or what is the process if somebody intends to invest with Genghis Capital in the fixed income, and what is the least amount that one can invest in fixed income? So Ken had shared with us that the minimum is 100,000, if I'm correct. So the minimum is 100,000. And what's the process if someone intends to invest with us? Macrane will reach out to you and guide you through the process of actually opening your account, your CDS account with Central Bank if you really don't have one, and then also the process of placing your bid. So Macrane, I've also noted that question and we'll reach out to you. We have someone, Solomon Kigoma, who says he registered with Genghis, but he's still waiting for his confirmation with CDSC. Solomon, I'm assuming you registered with us through our Jekuze app. So you will definitely get confirmation within 3 working days. Now he asks, once he's registered, will he be able to trade also with other entities, that is government? So I think if I understand this correctly, you're asking whether once your CDS account is open, you'll be able to buy and sell bonds, and the answer is yes. On our Jekuze app, the module for trading in bonds is not yet active. So if you're interested, you can either 1, use the chat function to place your request to the client relations team, or 2, shoot us an email on info. I'll also note down your name, Solomon, and I'll have someone reach out to you just in case you would like to know the status of your activation and start trading on bonds immediately. So that's done. I have someone who's asking, who do we contact for further discussion on PIMS? Maurice, maybe you can allow me to sip water as you answer that question.
I think I'd already given the contacts for one of our distribution guys that you can get in touch with. Then also from Ukraine, I've already also given another contact. I think I've handed them over to distribution guys.
Thank you so much for that, Maurice. You're doing a lot in the back end that I'm not seeing, but we definitely appreciate it. George Ndengwa is asking who's the custodian of Helaimara account. They do not want a repeat of the Cyton incident. Maurice, maybe you could speak to that.
The custodian for Helaimara is Stanbic Bank, and the trustee is KCB Trustee Services.
Okay, all right then. Thank you. Solomon Kigoma again asked, Jekuze app, can you explain further? Now, Solomon, Jekuze app is just an app that allows you to invest from anywhere, anytime. It allows you to open an account in the Genghis Money Market Fund, which is called the Helaimara, or also open a share trading account, that is open a CDS account. So using the app, which is available on Google Play and the Apple App Store, you are able to digitally onboard. Then once your account is activated, you are then able to either deposit money in your Helaimara, which is basically buy units, or you're able to deposit money into your share trading account, and then you are viewing the NSE market live, then you're able to buy and sell whichever counters you're interested in. The benefit of opening an account with Genghis and onboarding with us through Jekuze is that you get access to a lot of other value additions. So our research department, for example, sends out a weekly cross-asset strategy that covers both fixed income. So they do a summary of the bonds available, give recommendations of buy or sell. They also tackle the equities market. So they talk about the developments in the financial markets. They also give their recommendations, whether it's buy, sell, or hold on specific counters. They also added a special segment for people who are interested, and I've seen quite a number of people are interested in global financial markets. So they'll either be talking about gold or global indices. We also include a commentary on derivatives, because derivatives is a new financial instrument that's doing really well in the Kenyan market, but a lot of people are not aware of its potential. So when you become a Genghis client, you have access to this kind of reports. You also have access to this kind of webinars. We are a very approachable lot, and I think a lot of the clients who are on this webinar can attest to it. Well, we're always open for that phone call, for that email, for that WhatsApp, just to help you realize your gains. So that's what Jekuze is, and that's what Genghis Capital has to offer. If I go to the top, I have Riri who asks, how would one invest in the fixed income securities market in Kenya? Is it that I have to open a stock brokerage account, open an account with an investment firm? So Riri, this was addressed previously. I hope you were here when we talked about how you open a CDS account to be able to buy and sell, to place bids for treasury bills. Solomon, you've asked, how do you place these bids? Please let's discuss this offline. Like Maurice says, you can place the bids directly, but we also have a fixed income desk that can assist you to do this. So we are very happy to have this conversation. We've answered anonymous questions on PIMS. If you sell your bond before maturity date, will you incur any penalties? This is from Mohammed. Ken or Maurice, could you please answer this question?
So let me take that one. You not incur any penalties, but what I guess Shonia was asking was whether you can sell the bond through the secondary market. And as I indicated, what will happen is there are two ways. Initially, I'd said there's an option where the issuer of the security can give you an option to recall before maturity, but they give you specific dates. Say, for example, they'll give you a paper for like 5 years and tell you maybe from year 4, if you want to exercise your option, you can exercise the same. You not incur any loss. Number 2, if you want to sell to the secondary market, now you'll go back to whatever we were discussing, the movement of interest rates. So if the rates have gone down, you may even get more money than you invested. If the rates have gone up, there's a likelihood that you're going to lose the investments. But if you hold to maturity, you are bound to get whatever you placed, plus now the accrued coupon up to that particular date. So I hope I've answered it correctly.
You have answered it very well. You never have to worry. Suzanne is asking, what is the Cyton incident? Suzanne, unfortunately, we really are not in the business of discussing other firms, but I would just recommend that you just do some due diligence. The internet is your friend. You'll be able to get further information. We have Anonymous who's asking, how do we get to buy the foreign bond? I think he means the Euro bond. Ken, is the secondary market still open for the Euro bond?
So you can always place your bids. Some investment banks have, you can approach some investment banks and usually they can tell you which ones are on offer. I guess that's a conversation you can also take offline if you really want to invest in the same. Yeah, because I know we can link you up with people who can offer you the same.
Okay. Now, Anonymous, I would have reached out to you. The only problem is that I'm not certain who you are. So if you'd like to buy a foreign bond, Genghis Capital has an investment bank. Reach out to us on info@genghis-capital.com and we can continue the discussion. We have someone else who said, had invested in Genghis Hela Fund before Chase Bank collapse. As investors, we lost some money. I guess we are now only guaranteed to the tune of 75%. Is there a risk of losing money, current money market fund? Maurice, you could answer that question.
Is there a risk of losing money in the current money market fund? I think if you look at how...
Yes, in Hela Imara.
How Hela Imara we are investing, the fund is mainly supported by the investment in government bonds, which also, as we spoke earlier, government bonds we usually say that they are default free because chances of government failing to pay is almost zero. So what we've done as a result of those past experiences, that we've improved our investment processes and also where we have companies that we're investing in terms of bank deposit and also where we having significant exposure for the fund, which is made in government instrument. So what we've done is just all those changes will enable us to be able to give better return and also it sort of like reduce the risk level for the fund. So we are working hard through our processes and the process to ensure that at least what happened will not repeat again for Hela Imara.
Okay, and I think your answer also covers someone else who anonymously asked. He says they have been seeing a lot of volatility in the market. We have seen some high yield funds in trouble recently in the market. How do we guarantee the safety of funds? So I believe what you've said really takes home that fact.
Yeah, and I think if I can just add for 1 minute, if you see any other fund, the question that you should ask yourself is, what is the underlying asset that is supporting that return? Then if you are comfortable with that underlying asset, then you are comfortable with the fund. So funds are not the same. Funds are defined by what giving them the capacity to generate that return.
Okay. Benjamin, I can answer your question. Oh, sorry, Ken, go on. Yes.
I think just to enhance what Maurice is saying, is that on a monthly basis, we usually give a fact sheet for all our funds. Even as person is shooting for their investment item to which particular money market fund they want to invest into, it's key to ask for a fact sheet compare, and that way you'll know the underlying asset generating the return that we're talking about.
That's a perfect add-on. So if there's anyone who's actually interested in reviewing the Helaimara Fund fact sheet, you can find it on our website, which is Genghis-capital.com. Navigate to Money Market, and right at the bottom, you'll find the most updated version of the fund fact sheet. So like Ken says, it gives you detailed specification on the allocations of the different funds of the fund. It also lists down who are the custodians, who are the trustees. So that level of transparency is meant to inspire investor confidence. Benjamin, I can answer your question. You say, if I invested in bonds through a fund house like ours or a bank, if that institution, e.g. Genghis, went down, would my money be gone, or can I still access my investment being that I invested in government bonds? If the institution in which you used to invest in a bond went down, it doesn't affect your bond because that is an arrangement between you and the government of Kenya. So your investment would be secure. I hope that has answered the question. Titus, I think we had talked about this earlier. If I'm interested in fixed income like T-bills and I have no account to start investing, can I personally go to CBK and open an account, or Genghis can facilitate for me that? You have both options available to you. So you decide what's more suitable and then action it, but we are here to assist you. We are drawing to the end. Olivia Mutai, I have noted you down as someone to reach out to so that we can help you start the investment process. So you'll definitely be hearing from us. And then I probably saved Elizabeth's question for last because I'm a big book person. Thank you for this session. I'm glad to be a part of this. Is there a book you would recommend for me to read? And can I talk to one of you for more insights? So Elizabeth, I will also note you down as someone we need to reach out to. Maurice and Ken, you're in the hot seat. What books would you recommend? Because for me, my books are an escape. My books tell me stories. But is there a book that you could recommend? Or do I let you sit on that for a minute? I see Ken thinking. Maurice is a hard one to read, but I think he is also thinking. We will come back to you, Elizabeth. We've not been struck down by the question. Suzanne, you've sent another question. Who can I contact in Genghis to open a serious account for government bonds and T-bills? I want to get in on this. So Suzanne, I'm writing down your name so that we can reach out to you after the session. You can get in touch with us through info@genghis-capital.com, but we will reach out to you ourselves. Let me just do a quick sweep of the chat to make sure we've answered all the questions in the chat before we draw to an end. Wow, people have been busy. I have Warren. Warren, you have identified yourself. I had seen you here. I am the anonymous participant. I did not know I was participating anonymously. Warren, we like you as Warren and we like you as anonymous. We will reach out to you because I think at some point you wanted to know how you could invest with us. So we'll reach out to you. Fidelis is asking, is a minor account also taxable considering a minor has no tax or PIN? Maurice, please help us.
Is the minor account taxable?
Yes.
That's the question.
Yes, so I'm assuming what Fidelis means, they open a Helaimara account for their child. Will that child be subject to withholding tax?
It will be subject, because if you look at how the minor account will be structured, you are just saying that this money is meant for this child, but actually the guardian is the holder of the account, so it will be taxed.
Okay, awesome. Elisha, thank you so much. So Elizabeth, I don't know if you've seen Elisha, but he's recommended a book called The Richest Man in Babylon. I've actually heard of this. I believe it's a parable. Elisha, I stand to be corrected. So I really love this. If anyone else has a suggestion for Elizabeth, please do share it. Maybe you guys could start an offline book club, but that's a discussion for another time. But thank you so much, Elisha. And if anyone else has suggestions for Elizabeth, please do share them. I have finished the Q&A questions, so now let's just wrap up in the chat. Monica wants to know, reach out to me, what Genghis capital percentage is from the first one mix. Now, Monica, I'm not sure if you mean from, let's say, from Helemara. Helemara did say that our rate is net of management fees, which means when we publish 10.56, we've already taken into account the management fee for the farm. Maurice, I think you'd cover the amount of, in terms of our percentage for fixed income, but we will definitely reach out to you, Monica. Let me just note down your name, Monica Muraguri. We'll definitely be in touch. Gladwell says, thank you so much for that compliment. Thank you for the session to convey my appreciation for the feedback and the opportunities Jenkins offers. My chama joined this month and we love it so far. Gladwell, we are so happy that you're part of our community and for the positive feedback. And if you ever encounter any hurdles or anything that we can assist, never hesitate to reach out to us on any of our socials or our email address. We are really very responsive. Alan, will I get this recording? For sure, this recording will be emailed to you because when you register, you give your email address. So we'll send you an email within 24 hours with the link to the recording. It's also going to be on the Genghis YouTube channel. Please visit it. It's Genghis Capital Ltd. You will find a list of similar videos. Subscribe and you'll be getting this information. Frank, thank you so much. He says, very grateful for these sessions and for your time to answer the many questions. Thank you so much for that. Many blessings. I joined Jenga this year and I'm delighted. The app is also amazing and the team is very warm and kind. Frank, thank you so much. I think we're able to be warm and kind because you are our clients and you really keep us. We are what we are because of you. So thank you so much for that. Otieno says, such an insightful talk. Is Maurice taking mentees? Maurice, are you taking mentees? I think that's like Toastmasters. I would like to benefit from mentorship on how the functioning of the market. Okay, so Maurice, are you up to have can you be a mentor? Maurice, can you be a mentor? Please tell Otieno, can you be a mentor?
Yes, Otieno, I can try.
Oh, Otieno. Otieno, when he tries, you will definitely benefit. But thank you so much for attending.
You can give him my contact.
Okay, all right. Frank Otieno, I will email you Maurice's email address. Faith Joko says, just to clarify, you said the minimum amount for fixed investment like bills and bonds is 100K. Is that your minimum or the government minimum? Because she thought the T-bills, the minimum was 50K. Ken, please elaborate.
For T-bills, it's 100,000, but then you can trade in lots of 50,000 together. So after 100,000.
You mean in the secondary?
No, even if you want to place additional trades, it will be now in 50,000. And also trading will be in lots of 50,000. For T-bonds, initially it was 100,000, but if you look at even the prospectus of the auction for October, it's 50,000 minimum investment. Yeah.
Okay. All right. So Faith, I think the perfect way to handle this is if you're interested in a particular bond, we can look at that specific prospectus. Then you're able to give in your bids in those specific lots indicated. John Musembi says, not a question, but would recommend Intelligent Investor by Benjamin Graham. Elizabeth, you're getting lots of help. John recommends Intelligent Investor by Benjamin Graham. So thank you so much, John. Harry says, Think and Grow Rich is a great read. So for real, I think, should we start a book club? Maybe we should start a Genghis book club at this week. We have lots of readers here, and that's really awesome. Thank you so much, Harry. Ben wants to start investing in stock market. When should I start? Ben, if you want to start investing in the stock market, the best time to start is today. So check out our Jekuze app. Like I said, you can digitally onboard, and we can help you in your investment journey. Thank you for the compliment, Harry. Why any lovely presentation. It was easy to understand and you guys are vibrant. Well done. Thank you so much. Emmanuel, thank you so much. The session was insightful. I would like to invest with Genghis Capital. Please reach out to me. So Emmanuel, Abraham, I have noted you down. We will be in touch with you, and thank you again for expressing that interest. Solomon Kigomi also wants, Morris, you're a popular chap. He wants your email or phone number for consultation. So Solomon Kigomi, we will definitely do that. You can continue discussions with Morris. Morris.
Yes.
I think for our next webinar, you will be the one hosting, but Ken and Morris, you guys are an awesome pair. You are like the yin and yang, and I'm the one just hanging out watching with you. Maxine Karaoke also wants us to reach out to them. So we'll definitely do that. If you also do want to engage with us, once you get the email from us, please feel free to respond to the email indicated and we can continue the conversation. So I think I would like us to wrap up in the next 3 minutes. 4 more questions hop in. Let me see if it's something we can quickly address, then we can call this session concluded. Does Genghis Capital invest in real estate, Morris?
For now, no. But what we are working on is to register a fund that will give investors opportunity to save for house acquisition. But at the moment, no.
Okay, awesome. Noel, we will definitely email you. So thanks for that. Grace, you're very much welcome. And Faith really wants to clarify. Oh, this is the same question you put in chat. So Faith, I believe Ken clarified on this. And whenever you need to invest, we just check out the prospectus to confirm the minimums. So, oh, Suzanne, I have a joint CDS account with Genghis and a Chama account too. I wanted to see what I have purchased in mystocks.com, whereby I get to see how investment is doing. Somehow this has not been possible and would like to have someone I can speak to find out how this can be achieved. Okay, Suzanne, be there. We will get someone to talk to you about your stock portfolio. I have noted that down. So thank you so much. So we've come to the end of our session. Thank you so much for our wonderful interactive session. This was the first of its kind. We plan to make them monthly, so we hope you'll check out our socials and keep an eye out for when registration is open. After you leave this webinar, there'll be a brief anonymous survey, just 4 questions. We'd really appreciate your feedback on the questions indicated. We want to be better for you, so we'd really appreciate your feedback. Maurice, Ken, is there any parting shots? We start with Ken.
No, mine is not a parting shot. It's more a books person, but I've watched movies which I think help me understand the market and whatever is happening.
Okay.
So maybe I can recommend around 4 movies that I think, who was it? Someone was asking about.
Okay, shoot.
I can recommend The Margin Call.
I've watched that, surprisingly.
The Big Shot.
Big Shot.
Yes.
Boiler Room.
And Betting on Zero.
Betting on Zero. Okay, thank you for that. When we get eye fatigue from reading, we'll definitely watch them. Thank you so much, Ken. You're awesome. When COVID abates, you come back to the office, we'll talk about that gym membership. Whee! Maurice, any final words?
For me, just to add on Ken's list of recommended books and movies that someone should bother themselves with. Me, I think the books that gave me insights about investment at basic level was the Rich Dad and Poor Dad. And also the second one was the Cash Flow Quadrant. But there's a book I would recommend, but it's more complex. It's called Colossal Failure of Common Sense. It's an insider story into the collapse of Lehman Brothers. It tells you what are fixed income, what are structured things, what are equity investments.
Okay.
So those ones. But I think today was the beginning of this session that we started as Genghis Asset Management Division. I think we'll be focused on this at the end of the day. What we want informed investors that understand what they are doing, And I think sessions like this are good for equipping our clients and prospective clients with information on what's happening in the market and how they can evaluate the opportunities presented to them.
Okay, awesome. Thank you so much, Maurice. So if we've not attended to your questions, reach out to us at marketing@genghis-capital.com. We can continue the conversation, or find us on Twitter, Facebook, LinkedIn, Instagram, or join our Telegram channel, and we can continue this discussion. You're very much welcome. We will see you in October. Stay safe, stay healthy, and go out and make some money.